Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Curtiss-Wright Corporation Annual Report. Curtiss-Wright Corporation provides a wide range of engineered products, solutions, and services to various markets worldwide. The company operates through three main segments: aerospace and industrial, defense electronics, and naval and power. The aerospace and industrial segment offers industrial and specialty vehicle products, sensors, controls, and electromechanical actuation components for commercial and military aircraft. This segment also provides surface technology services including shot peening, laser peening, and engineered coatings. The defense electronics segment provides embedded computing board-level modules and processing equipment, data acquisition and flight test instrumentation equipment, integrated subsystems, and tactical communications solutions. It also offers electronic stabilization products, avionics and electronics, flight test equipment, and aircraft data management solutions. The naval and power segment offers main coolant pumps, power-dense compact motors, generators, steam turbines, valves, and secondary propulsion systems for the naval industry. This segment also provides energy absorbers, retractable hook cable systems, net stanchion systems, and mobile systems to support fixed land-based arresting systems. Additionally, it furnishes severe service valve technologies and services, heat exchanger repair, and piping test and isolation products. The company's services include ship repair and maintenance for the U.S. Navy, as well as various nuclear reactor technologies and spent fuel management products. Overall, Curtiss-Wright Corporation provides a comprehensive range of engineered products, solutions, and services to meet the needs of its customers in aerospace, defense, commercial nuclear power, process, and industrial markets. The list of businesses and services provided by Curtiss-Wright Corporation includes industrial and specialty vehicle products, sensors, controls, and electromechanical actuation components for aircraft surface technology services, shot peening, laser peening, engineered coatings, embedded computing board-level modules and processing equipment, data acquisition, and flight test instrumentation equipment, integrated subsystems, tactical communications, solutions, electronic stabilization, products, avionics and electronics, flight test equipment, aircraft data management solutions, main coolant pumps, power-dense compact motors, generators, steam turbines, valves, secondary propulsion systems, energy absorbers, retractable hook cable systems, net stanchion systems, mobile systems for fixed land-based arresting systems, severe service valve technologies and services, heat exchanger, repair, piping test, and isolation products, ship repair and maintenance for the U.S. Navy, nuclear reactor technologies, spent fuel management products. Unfortunately, I don't have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to skyrocket. The stock price of Curtiss-Wright Corp has seen significant growth in the past year, and several factors may be contributing to this trend. One possible reason is the company's strong financial performance, including increased revenue and earnings per share. This can lead to higher investor confidence and demand for the stock, driving up its price. Another factor could be the company's strategic acquisitions and partnerships, which have expanded its product offerings and market reach. This can create new opportunities for growth and increase the company's competitiveness in its industry. Additionally, Curtiss-Wright Corp may be benefiting from a favorable business environment, including a strong demand for its products and services. The company's commitment to innovation and research and development could also be driving its stock price upward. By investing in emerging technologies and developing new products, Curtiss-Wright Corp is positioning itself for long-term success and growth. This can attract investors who are looking for companies with a strong potential for future returns. Overall, the combination of strong financial performance, strategic business moves, and a favorable business environment may be contributing to the significant increase in Curtiss-Wright Corp's stock price over the past year. Curtiss-Wright Corporation maintains a market capitalization of $26 billion, broadly in line with the industry peer group. Curtiss-Wright Corporation trades at a higher price-to-earnings ratio of 53 times and a higher price-to-book ratio of 9.86 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 51% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline are multifaceted and influenced by various market trends, government policies, and internal factors. On the growth side, key drivers include the demand for aerospace and defense technologies, critical engineering expertise, precision manufacturing, and innovation in new technologies. Government funding, particularly from the U.S. government, foreign defense spending, and commercial nuclear power plant maintenance, also contribute to revenue growth. Additionally, successful implementation of acquisition strategies, effective integration of acquired businesses, and investment in research and development are crucial drivers of revenue expansion. Market demand for commercial nuclear products and services, as well as the ability to supply these products, also play a significant role. However, factors such as delays in small modular reactors, changes in government regulations, foreign currency fluctuations, and tariff policies can hinder growth. On the decline side, new orders decreased primarily due to timing issues with aerospace and ground defense equipment. A decrease in other current assets also contributed to revenue decline. These drivers highlight the importance of adapting to market trends, managing internal factors such as research and development investments, and navigating government regulations to ensure sustained revenue growth. Net income and profit margins. A changing landscape, the net income of a company has undergone significant changes over the past few years. According to the extracted summaries, the net income increased by 20% from $404,978,000 to $484,228,000 in 1 year, indicating a substantial growth. However, this growth was not consistent across all periods, as it decreased by approximately $13 million due to foreign currency exchange rate fluctuations. Profit margins also experienced changes across different segments of the company. In the aerospace and industrial segment, profit margins increased from 15.9% to 17%, while in the defense electronics segment, they rose from 24.7% to 27.3%. However, in the naval and power segment, profit margins decreased slightly from 15.6% to 15.4%. The total consolidated net income and profit margins also showed changes. The net income increased by 20% from $528.6 million to $633.5 million, but the operating income decreased by 18%. Moreover, the profit margins decreased from 10.1% to 9.7%, indicating a slight decline. The reasons behind these changes are not explicitly stated in the summaries, but they may be attributed to various factors such as market conditions, competition, and economic fluctuations. Despite the fluctuations, the company's net income has shown overall growth, while profit margins have experienced mixed results across different segments. The company's debt level has undergone significant changes over the past few years. Initially, the debt principal increased from $0 to $957.5 million between 2024 and 2025. However, a closer look at the data reveals that total debt actually decreased from $1,047,500,000 in 2024 to $957,500,000 in 2025. Furthermore, as of December 31, 2025, the fixed income portion of the debt was lower than the previous year. In terms of interest expenses, there has been a notable decrease. The interest expense decreased by -4% from $44,869,000 in 2024 to $43,148,000 in 2025. This trend is consistent across multiple pages, with some even mentioning a decrease of $2 million, 4%, to $43 million. However, it's worth noting that the company's interest expenses were higher in 2023 compared to both 2024 and 2025. The company's performance varied across different segments and regions. On a positive note, the defense electronics segment showed strong results, driven by growth in naval defense markets. The naval and power segment also performed well, with significant contributions from the U.S. military spending. Non-U.S. military spending and commercial aerospace narrow-body aircraft sales were other areas of success. The EMD business unit was another highlight, contributing to the company's overall performance. International markets also showed promise, with growth in various regions. In contrast, the aerospace and industrial segment struggled due to OEM production rates, government funding, and economic conditions. Commercial aerospace wide-body aircraft sales were particularly weak. The defense electronics segment, while strong overall, had its weakest growth and lowest operating income. The company's domestic manufacturing facilities in Arizona, California, New York, North Carolina, Ohio, Pennsylvania, and South Carolina showed mixed performance, with no specific information available for these regions. Internationally, Canada, Mexico, and the United Kingdom also exhibited mixed results or lacked detailed data. Management is committed to driving innovation and growth through strategic investments in technologies and core competencies. The company's pivot to growth strategy aims to maximize revenue, operating income, and free cash flow by accelerating top-line growth, expanding into new markets, and allocating capital efficiently. Key areas of focus include leveraging engineering and technological leadership to maintain competitive positions, diversifying end markets through innovation and collaboration, and anticipating growth in defense markets due to increased spending. The company also sees significant opportunities for growth in international markets, the nuclear power market, and aftermarket products and services. Management is confident that the company's cash reserves are sufficient to meet both short-term and long-term capital needs, but may need to adjust capital expenditures or obtain additional financing if necessary. To mitigate risks, the company uses derivative financial instruments to manage currency rate exposures and attempts to minimize changes in interest and currency exchange rates. Overall, management is optimistic about the company's outlook, citing opportunities for growth, innovation, and profitability through strategic investments and market diversification. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out a consistent amount over the past 2 years, with payments ranging from $0.20 to $0.24 per share. The total dividend payments made in 2025 were $35 million, while in 2024 they totaled $32 million. In addition to paying dividends, the company has also been actively buying back shares on the market. In 2025, a total of 250,016 shares were purchased, with a maximum dollar amount of $254,952,689 that may yet be purchased. The share buyback amounts for 2025 and 2024 were $465 million and $250 million respectively. These actions demonstrate the company's commitment to returning value to its shareholders and maintaining a strong financial position. Concerns about inventory buildup and supply chain disruption. The current situation raises red flags regarding inventory buildup and potential supply chain disruptions. An increase in inventories by $73.7 million, 13.8%, from 2024 to 2025 is a significant concern, particularly when broken down into raw materials, work in process, and finished goods inventory. This surge in inventory levels may indicate an imbalance between production and demand. Furthermore, the decline in new orders could exacerbate this issue, leading to potential stockpiling and decreased efficiency. Moreover, concerns about supply chain disruptions are also valid, with trade barriers, labor shortages, and global supply chain disruptions posing significant threats. These issues can have far-reaching consequences for businesses and economies, making it essential to address them promptly. That concludes the financial summary for Curtiss-Wright Corporation. Feel free to comment below, and I will be happy to answer them when possible.